forecast was, our bull case was $1.5 million in 5 years. So that would have been 2027. We still have time. And we still think that's going to be right. If you just look at the institutional push into Bitcoin, this new asset class, they have to consider it as fiduciaries. When you use those code words, new asset class, what it means, the correlation of these returns are very low compared to those of other assets.
Especially as bonds and stocks are becoming more correlated, you need something uncorrelated.
Yes, absolutely, absolutely. And so they have to consider it. Now, what are we saying? There are 19.6 million Bitcoin out there right now, and the highest it will ever go is 21 million. Okay, there's real scarcity value. And what is going to happen? The price increase for every institutional dollar pushing in now is going to be much higher than it was last year, 2 years ago. It's, we're going to get into, if these institutions really want to own it, what I found fascinating recently, just learned it this morning, is typically when you go through a price move, a Bitcoin price move to the upside, you usually see long-term holders, which is a metric we monitor. It's an on-chain analytics metric. And it means people who have not moved, or wallets that have not moved their Bitcoin in 155 days or more. Yes. Well, normally when you go through a price move to the upside, a very nice one like we've seen in the last year, that tends to start moving down. And it did that, true to form, but it has reversed in recent days because what we learned is GBTC sold some of its Bitcoin. So those wallets hadn't been changed in a long time, right? Now that is done, at least for the time being. Now that is done, and it's going back up again as the price goes up. That's highly unusual. And I think it is because the long-term holder is saying, why would I sell now when I know all these institutions, which own nothing in this realm, in this new asset class, they have to consider it because it is a new asset class.
Bitcoin's trajectory is set to soar to $2.5 million within the next 3 years. This projection stems from its emergence as a distinct asset class, compelling institutions to divert their investments towards it. According to Cathie Wood, CEO of ARK, in a recent interview with Peter Diamandis, the current surge in Bitcoin demand is merely a precursor to what lies ahead. As one of the Bitcoin ETF issuers, she elucidates that major wirehouses like Morgan Stanley are yet to integrate Bitcoin ETFs into their platforms, thereby limiting access for a significant portion of investors. As these ETFs gradually permeate the investment landscape, a surge in demand is inevitable. Furthermore, what highlights Bitcoin's unparalleled uniqueness as an asset? Its non-correlation with stocks or bonds enables investors to diversify their portfolios effectively. Modern portfolio theory underscores the potential for enhanced returns without a corresponding increase in risk when uncorrelated assets are combined. This prospect entices both individual and institutional investors, driving them towards Bitcoin. With Bitcoin's cap supply at 21 million, its value trajectory appears unidirectional. Stay tuned until the end of the interview, where Wood elaborates on her bullish stance on Ethereum and Solana, further emphasizing her confidence in the cryptocurrency market.
Stop. You don't have time. Don't miss out this 2025 bull run. Educate yourself first ahead of the crowd. We have created the ultimate step-by-step crypto cheat guide that will guide you this bull run. Unlock the secrets of crypto and make smarter investments today. Now by clicking on the link below to get your exclusive copy just under $10.
What's interesting is the wirehouses which dominate our customers. So Morgan Stanley, all the advisors at these wirehouses, Morgan Stanley, UBS, Merrill Lynch at B of A, Wells Fargo, not one of them has approved Bitcoin on its platform. That hasn't even happened yet. And those are our primary clients. When that happens, wait until you see.
Explosion. Bitcoin. Congrats on your ETF. It's done very well. You're number 3 now?
Number 3. This was David against Goliath. And, so this is a very nice win for us. Now, we're not finished. And in fact, in our business, what's interesting is the wirehouses, which dominate our customers, so Morgan Stanley, all the advisors at these wirehouses, Morgan Stanley, UBS, Merrill Lynch at B of A, Wells Fargo, not one of them has approved Bitcoin on its platform. That hasn't even happened yet. And those are our primary clients. When that happens, wait until you see.
Explosion.
Yes.
Yeah, I used to, years and years ago, I went on CNBC saying I sold all my gold and I bought Bitcoin. And I said, it follows the 6Ds roadmap. It's digitized, dematerialized, demonetized, and democratized. And in all of these things, you have slow, deceptive growth, and then it becomes disruptive. And we're just it's been a slow disruption, but in the institutions coming on, and then governments following. The ship has sailed.
Yes, it has. And this is not just a technology. It's a new asset class, right? And beyond that, it's a global monetary system. It is the first global, private, meaning no government oversight, digital and decentralized, rules-based. That's the most important word here. Rules-based monetary system in history. In the financial world, exponential, that concept, the last time investors heard it was during the tech and telecom bubble. And for them, that ended badly. Now they just don't believe it. They don't believe it's possible to sustain growth rates at 15, 20, 25% plus per year. But what we think is going to happen is not exponential growth, but super exponential growth as we get the convergence between among technologies out there. In 2017, when Bitcoin was below $1,000, and there was a war going on between the Bitcoin maximalists and those focused on the Ethereum network. Chris Berniski, you may know him. He was our first crypto analyst and went off to start Placeholder. He decided, you know what? We should have a meetup at our office between the Bitcoin and Ethereum supporters, and we'll provide rules of the we'll provide rules of the road. And Bill was the grown-up in the room, set the tone from the Ethereum side, and we had such a productive talk that I went out and bought Ether right away. I already owned a lot of Bitcoin because it was so convincing that there's a place for both. And
Bill is a brilliant adult in this space. Yes, for sure.
Yes. And so yes, we're very excited about the Ethereum network and Solana. And so they all play different roles. And what I love is there's kind of a little competition. I think competition is always good to keep the other networks honest. And so, yes, we think that decentralized finance, and we do call it now the internet financial system, which is really Chris Berniski coined that. Yes.
I like that because it really talks about the functionality more than this ethereal idea. It is the financial backbone, and it's really the dematerialized and democratized access to taking action in the world.
Absolutely. And taking the middlemen out of everything. When
get the sand out of the gears.
Yeah, when we did our digital wallet work, we're saying, okay, let's try to figure out how many steps it takes for a merchant or for a consumer to pay a merchant. And that was 9 steps, including the 2 of them. And that's, there are many other middlemen, but these were the most direct steps. And that is a 2 to 4% tax on every purchase in the world if you're using intermediaries, credit cards, and so forth. So just think about that, cutting that tax rate dramatically is going to increase access.
Cathie Wood's latest projections for Bitcoin's future underline a significant trend: the burgeoning surge in Bitcoin's value and its integration into major financial platforms. With a finite supply of 21 million coins, Bitcoin's trajectory appears distinctly upward, positioning it as an irresistible asset for institutional investors keen on diversification without escalating risk. As the adoption of Bitcoin continues to unfold across various financial landscapes, its potential as a robust investment avenue becomes increasingly evident. Cathie Wood's insights underscore this momentum, suggesting that Bitcoin's allure for institutional investors is poised to intensify further in the coming years. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.